Yo, is this thing on? Are we live? Check 1 2. Check 1 2. We are live. Excellent. Good afternoon, everyone. I got a message from the guy on the right side of your screen, Jason Purse, last night around 6 o'clock. So he wasted no time at all, and he said, "Hey, crude oil is at 100. We should go live tomorrow." And I said, "Deal." And then we recruited Sam Gatlin into the mix, and here we are. So I got Jason Purse, I got Sam Gatlin from All Star Charts Gold Rush. Let's talk about crude oil. What guys? What besides like war and stuff? What the hell is going on?
Yeah, I mean, there's a lot going on today and a lot going on yesterday, obviously. So we have the Iran situation. Obviously, people know that they control a lot of shipping routes. So it's a huge place. Not to mention, Iranian oil is a lot easier to refine than just about every other oil on the planet, and most of the world is set up to refine Iranian oil. So it's been a big source of contention for many years. I mean, go back to even the early 2000s. We've been talking about going in there to get the oil for a long time. We've been, that was one of the countries that we were talking about going into right after 2001, after 9/11. And it just hasn't really panned out that way. There's been a lot of things that have kind of come up in the interim, but now it seems like they're trying to go for it. And I don't think this is going to be a small situation, Spencer. You had the situation that happened in Venezuela where, you basically had their leader coming out with his hands up going, everything's fine, go ahead, like it's done. This isn't going to be like that. This could be long. It could take a while. And there's a lot of things that affect geopolitics involved in it. So I think it's going to continue to probably boost the oil price. But once again, there's some things that we need to talk about today to let you know what risks are out there, how you need to be positioning yourself going forward, and where we need to be to make some money, because that's really why we're here, right, Spencer?
That's it. So Sam, can you help us put this move into context here? We had an insane move. Really, it didn't start yesterday, right? It started a few weeks ago, or longer, actually, a few months ago, you could say. But to put this move into context for us, we opened at what? We opened at 90 last night, 90 something. We got to 119 on the front month crude oil contracts, and now we're at 95 here as we're doing this video.
Totally, yeah. And this move really started back when we invaded, whatever you want to call it, the whole Venezuela situation.
Yeah, whatever you want to
happened,
call it. Invasion, whatever.
I'm not here to be political.
Yeah.
I'm just looking at the charts. Crude oil was threatening to resolve this massive potential distribution pattern back then. And that, in fact, was not a distribution pattern. This was more of a multi-year consolidation of volatility compression after that historic run off of the 2020 lows when not on this chart, but some other crude oil charts, crude oil hit about negative $50 back in 2020. And then we had that huge run into the spring of 2022. So when this Iran situation happened, we were at the upper bound of that multi-year range, and then last week we got that what seems to be a gap and go move, which historically when you go back, Spencer, what are you doing? Historically, when you study the best primary uptrends ever, whether it's I think Nvidia is such a wonderful example of this whole gap and go philosophy that I follow so closely because if you go back to I think it was May of 2023 when Nvidia had that big earnings reaction that blew everybody's socks off, and then you saw Nvidia grow into one of the largest, and it now is the largest stock in the world, hit about a $5 trillion market capitalization. And based on the strong long-term primary uptrend, I wouldn't be surprised to see Nvidia worth $10 trillion. And it started with that gap and go move. I'm not comparing crude oil futures to Nvidia, but all of these assets, they have charts, and chart patterns repeat over and over and over. And I think that's the situation here with crude oil futures. And a mentor of mine, Mr. Steve Straza, a fan favorite here around Stock Market TV, has this good saying that big moves begin with big moves. And that's exactly what we saw last week. Depending on which contract you're looking at, this was either the best year since, or the best week, since 2020, or the best week ever. I've seen some data sets that go back to 1983 that suggest that was the best week ever for crude oil futures. But the bottom line is that was as decisive of a breakout as you will ever see from this consolidation pattern. And if you go to that next chart, Spencer, with the Fibonacci extensions from that 2020 decline, this 102 level is a big one. You're finding resistance there today. But if you're above 102, I think the path of least resistance is higher to new all-time highs at 161, and then 250 is the next stop after that. And I included this chart in Friday's commodities weekly column for All-Star Charts Gold Rush members. Saying you need to be open-minded to the potential for crude oil to get to 250, and I posted this chart on Twitter as well, and people's heads were exploding. They just couldn't fathom a world where crude oil hits $250. The stocks would go to zero. The economies would crumble around the world, and everything would just completely fall apart. And I'm not here to say whether or not that's the case, but I've studied charts over many cycles going back many decades, and this chart suggests that is a serious potential that not many investors are thinking about right now, that crude oil could get to $250. And there are some fundamental analysts out there in the energy complex that I highly respect, Josh Young as being one of them. He's been on our show here on Stock Market TV. We do a show for Gold Rush every Thursday at 2 p.m. Eastern time. He's come on there before and said that exact thing, is that there's been a structural suppression of energy prices, of crude oil prices in specific. And that, really could happen this cycle where we see $250 crude oil. And I highly recommend everybody go to Bison Interests, his blog, and get the crude oil $250 hat. I got one for myself this weekend. I got the order confirmation on my phone today.
Oh boy.
I'll be rocking this next time you see me on Stock Market TV. $250 crude oil.
Do we think that geopolitics respect Fibonacci levels?
Hell yeah, they do, Spencer.
They do? Okay.
Nature does, so geopolitics do, Spencer. That's
got it. And of course, Jason, it's not just crude oil is the headline here, but it's not just crude, right? That's doing some weird things. It's all of them, right?
Totally, yeah, Spencer. Yeah, the entire complex is just now breaking out of this multi-year consolidation. If you equal weight crude oil, heating oil, RBOB, and natural gas, you are putting the finishing touches on a textbook. I mean, they literally draw patterns like this in textbooks for a bearish to bullish reversal pattern. So this is a brand new structural uptrend for energy. This isn't just a one-day pop based on some geopolitics and saber rattling. This is a structural change in the primary trend for energy. So I think the path of least resistance from here is not just to that spring of 2022 peak, but to new all-time highs for the energy complex as a whole. And if you look at the lower pane here, that adds an interesting nuance to the situation where, volatility based on the weekly Bollinger Bandwidth has been suppressed for a very, very long time. And it is just now beginning to expand. So I think there's a big move on the horizon here. As I mentioned earlier, you've started this move with a big move, but I think that big move could lead to an even bigger move. If I could say moves a few more times in a sentence. But you see where my head is at. This thing it's positioned to skyrocket, if you will.
Well, sorry. Speaking of bigger moves, hold on, Jason. This next chart is going to blow their minds. So Jay's asking in the chat, what are your thoughts on the dollar correlation with gold? Jay, hold that thought. I don't have a dollar. Well, actually, I do have a dollar gold chart, but that's not the point.
I'll just answer that right now, Spencer. I think it's more to do with energy. If energy is continuing to go up and outperform, I think dollars are going to go up. Jason takes the other side of that opinion, but I think that's a really interesting debate. And frankly, we don't have the answers. Jason and I each have our thoughts. But right now the dollar is just stuck in a range. So there's nothing to do right here.
And here's the thing, it's not exactly I completely disagree with Sam. It's that the environment that we're in, and even though I have the other side of the bet, so Sam, I will still pay Sam, and Sam will still pay me if we're right. We still have that bet, so don't worry, guys. But if we're looking at that, what I'm saying is, if Sam is correct, and let's say the dollar and oil go up together, that's a very scary environment for the stock market. Not trying to freak you guys out, but that's the end of a cycle usually. Meaning there's a war situation. Let's say this continues. Let's say it gets worse. Let's say it turns into World War III. That's a situation where people will continue to run into things like oil, but they will also run into dollars. That's usually how cycle ends. Think of 2022, 2008. You can go back as far as you want. Every time you see the dollar really take a big ripper and oil take a big ripper at the same time, it's very catastrophic for the global economy, because dollars getting very strong usually puts a lot of pressure on the stock market. That's one thing. And then after dollars getting very strong, what's the other thing that puts the most pressure on stocks, on people, on the economy? Oil. So if you get oil up near those levels, like oil's let's say oil gets to a price of 150, and then gas at the pump is, $4 or $5. This starts to grind everybody in the middle of it. And the dollar is very strong. You're in a very bad environment. And then globally, that environment's even worse. So that leads to recessions most of the time. So that's why I'm saying, if that happens, we're in a bad scenario.
Let's pump the brakes there for a second there.
What? That's what people want to know. Like that's the reason why I do what I do, is put out the feelers. I'm not saying this is happening today. I am saying that's the scenario why I disagree with Sam, and I do think that the scenario that's more likely here is that oil just continues up. This dollar thing is probably just going to happen for a little bit, and if that comes off, and let's say oil continues up, I think all the trades are still working. I think we start to have the stocks work, and that's the regime I'm in currently. And I haven't changed my mind on that. The other regime is stagflation, and that gets scary.
We're not going to talk about that today. This chart,
they want to talk about it.
I want to address this comment from W Now. This is an interesting one. Something Rick and I talked about earlier today, right here on Stock Market TV, about solar energy. Alternative energy is a pretty bifurcated market. Right now, we're seeing the dirty energy. That's really the place to be. Whether it's oil and gas, coal, those are the trades to be in. But if you look at solar, it's something we've noticed at the beat report. Man, these earnings reactions have been terrible. I mean, just go look at the Sunrun earnings reaction. That is a perfect example of what you've seen, but it's been virtually across the board. These stocks have gotten hammered for their earnings reactions, and they haven't seen a bounce since then. So I'm quite bearish on solar, tactically speaking.
Based on this chart, are we suggesting here that knowing what gold recently did, that crude is liable to do this, or energy really as a proxy is liable to make the same kind of a move?
I think so. And the reason is, one, Sam and I have been highlighting the cycle the whole time. Gold starts to move first, and you have the base metals, copper, and so on. And then we finally get to energy. And, it's been like that one that everybody's like, well, I don't know if it's going to happen this time, guys, because of solar, because of this, because of this. And granted, the cycle usually works the same way every single time. So now I'm looking at it and going like, this is a very similar base, Spencer. So if we look at gold, that top that happened was in August 2020. So August 2020, gold topped out and went sideways for 3.5 years. And then same thing in 2022. Energy topped out and went sideways for about 3.5 years. Now energy's starting to break out. I don't think and mainly what I'm highlighting here is a lot of people kept saying energy's a bubble. It's going to pull back here. It's overbought. All these ridiculous things that people say. And really, it's like people were saying the same thing to Sam and I when gold was at $2,500. They would tell us that gold was in a bubble, which is hilarious to think about today. So once again, stay along this sector. This could look very similar to this chart of gold as we look back in a couple years. I wouldn't be surprised to see that.
Totally. I think this is the roadmap. Jason and I just spent more time on our premium call with Gold Rush members talking about this chart exactly and how this probably is the roadmap for energy over the coming 2 years. As gold, I don't know if you know this, Spencer, gold just had its 2-year birthday for its bull market. On March 4th of 2024, gold broke out to new all-time highs and kicked off this entire commodity super cycle that we are now.
I didn't know it was 2 years, but I remembered it was around this time because it was about 2 years ago that we did our first video with JC talking about the commodity super cycle, and I thought, really? Is that what we're gonna do now? And then
people were laughing at us back then, Spencer.
Yeah.
They said, "No way, gold gets to 5,000. No way, you're crazy." You know what the world would look like with gold at 5,000?
And here we are.
Here we are. Not much has changed. Same old situation. And they're going to be saying the same thing about crude oil here, as I'm calling for 250 crude oil. But give it a few years, and you'll realize I wasn't crazy after all.
Okay, are we in the? Is this the danger zone? Is that what we're highlighting right now?
That's the danger zone
on this chart.
Yep.
What is the danger zone? What is that?
So basically, this is the zone where it gets up to, and it usually starts to turn around that zone. So basically, it's the big resistance zone that we're looking for long term in oil against stocks. And so basically, we started to get to the top end of that range. I want to say that was, earlier this year. So we started to get to the top end of the range, and it's like, I remember looking at it and being like, dude, is this range even going to hold this time? I don't know. And then it literally turned around and went down pretty quickly. And so that was a significant development that started to happen in the space. And so I think that we're just in a scenario here where oil, energy could be the outperforming sector for a little while now. It's not something where I'm saying like get out of stocks and run for the hills. I'm more saying like energy, cyclicals, materials, coal stocks, natural gas stocks, and so on seem to be leading the way. And it looks like technology like the Mag 7 and some of these big stock names that are over $1 trillion are not holding up nearly as well as these sectors. So it's basically just saying rotate into what's working.
Totally. Yeah. What the hell are we doing here if we're not here to make the most amount of money? And, right now the most amount of money is being made in these commodities.
And that's what this chart shows, right? This chart, all it is, it's zoomed at how far back. This goes back to the mid 90s. All it's showing is that for right now, this is a classic Jason chart. For right now, bonds are doing nada. Stocks were doing good. Not at the moment. They're being beaten by commodities, and gold has been the winner. But really, just commodities writ large.
And that's one thing that's important about this chart is the fact that gold has finally pulled back at all. Like we haven't seen much of a pullback in gold this entire time against commodities. It's just been in a parabolic up move. Commodities have been massively underperforming it. And mainly when we're saying commodities, we're mainly talking about the energy-based commodities, things like oil, heating oil, which is very similar to diesel, and gasoline. These have basically been weighing down the whole commodity complex for a while because they're the biggest weighting in the commodity complex. So now we're seeing that gold is starting to roll over against commodities. We're seeing the the New York Stock Exchange is starting to roll over against commodities, and the Dow, and even worse, the S&P 500 looks worse than the New York Stock Exchange currently against commodities. And now at the bottom of it, something it's been outperforming for a while, and it's just been chopping around, is bonds. So bonds have been a place that, basically it's dead money. It's just been sideways, boring, not much to do there. And now commodities are once again outperforming that as well. So commodities look like they're ready to outperform just about every asset class. I'm not sure about gold just yet. But other than that, it's looking really good for the commodity complex as a whole.
I love this chart here. This is the kind of data you can only get at All-Star charts. How many up weeks in a row has XLE had? How does that compare to history?
That's 11 consecutive weeks. Never have we seen that before. Granted, we don't have that much data for the XLE. I wish this.
Oh, what do we got? What do we got? We got 25 years? Sam?
Yeah, I wish it went back to the 1970s.
25 years of data is not nothing. But no, it doesn't go back 100 years. Nonetheless, 11 weeks in a row in the
totally
green.
Yeah. And as we talked about earlier, that breakout in crude oil futures is as decisive as it gets. And here you have the energy sector, which has gone absolutely nowhere since the great financial crisis, and now is breaking out to new all-time highs in the most decisive way possible Not just, it's getting overbought. The momentum indicators look fantastic, but you're also seeing, just if you simply count the number of consecutive up weeks, it's hitting record highs, and that is what you want to see when you are breaking out to new all-time highs. Is you want to see an overwhelming amount of demand relative to supply, and that's exactly what we're seeing today. So, ExxonMobil and Chevron, I believe, make up about 50% of this ETF. I think we got a question from Joel, not sure how you say that, asking about Chevron and Exxon. And yeah, I think the outlook there is very bullish. I've highlighted ExxonMobil and its potential to reach $1 trillion in market capitalization. And, people, again, look at me like I'm crazy when I say that, Spencer, but I really think that's going to happen this cycle. ExxonMobil will join the Magnificent Seven and Berkshire Hathaway and Eli Lilly and the $1 trillion club. It's currently at a $630 billion market cap. And I believe $263 is that price, based on the latest stats, that ExxonMobil would reach a $1 trillion market capitalization. So,
well, I mean, there was a time when it was the most valuable company in the world, right?
Totally. I think that's the environment we're heading into, Spencer, is where these commodity stocks will balloon into, a much larger influence on the index. Right now, energy doesn't matter to anybody who matters at all. It just is a very small part of indexes like the S&P 500, like the world's most important stock market index, the Dow Jones Industrial Average. Energy just simply doesn't matter, but I don't think that'll be the case back in a few years.
That's not very nice to say about Jason. Jason, you matter. You matter to me.
Thank you, Spencer.
Yeah. We have to acknowledge this as we're talking here right now. It's 3:24 on the East Coast. Crude oil just hit a new low of the day. We are now below $90. We are below 90. We are red. We have gone red. We are down 1% on the day in crude oil. We were up at $119 last night. We are now at 90, basically.
I see it's still at 95, Spencer. What are you looking at?
I'm looking at my Thinkorswim platform.
Okay.
I'm seeing it at 90. What are you seeing, Jason?
I'm looking at it right now. Let's look at the position.
Just look at my own exposure. Yeah, that's a good idea.
Yeah, slightly down.
Yeah, we're down.
I mean, the April contract is slightly down, but it's at 90. It's just hanging out at 90.
Yeah, we are there.
Yep.
Look at that. We've
got give back.
We've round tripped it, everyone. Mm-hmm. What a day!
Mm-hmm.
What a day! Everyone was freaking out about crude at 100 last night. Well, it lasted for a couple hours. What about this chart we have?
And Spencer, right, like environments like this, I think it's really important to take a deep breath, not get too emotional with these swings, because get used to it. You're going to see a lot of these huge intraday swings. Remember to just take a step back, zoom out on the charts. Like we were just talking about XLE being up for 11 consecutive weeks. So this trend still is very much higher.
I think that is the big takeaway. If you're freaking out about these intraday moves or whatever, is just zoom out on the chart. Look at a daily, look at a weekly. You zoom out on the chart and you get charts like this, right? Natural gas. This chart goes back to 2012, all right? And look at that. Resistance is resistance until it's broken. It looks like it's broken to me, but can it stick it? That's the question.
Totally. Yeah, this is my favorite ETF out there in the energy complex. XLE looks fantastic. I like it a lot. But man, this FCG is built differently. I think this one has the potential to get back to that 2014 peak. And I think that's about a 5X from current levels. And Jason, we were just talking about this. What's the word for 5X?
Oh, quintuple.
This is a quintuple right here.
Quintuple.
FCG.
Mm-hmm. We could hit a quintuple here. I don't think, to me, it's looking at these sectors and thinking like what it's going to look like in 6 months. The short-term volatility, I expect it. I expect us to get over $100 and have a sell-off, because guess what? Humans don't look at it like technicians. They're not looking at Fibonacci levels every time. They're not looking at, targets. They're not trend following like me. They're looking at it and going, oh my God, $100 oil, that's the end of the world. I need to be out of this. I did this trade. That's what I wanted. And they're going to freak out because it's an even number. So you're going to get big sell-offs around that zone. But think about it like silver at $50. Silver at $50 had a lot of volatility, and everybody was like, that's the end of silver. And really, like Sam and I came on, we're like, look, if we start to really sustain above that level, that's going to be a time where we're going to see silver really take off and start heading towards 73 at that time. And we absolutely did. Once we stuck that, we ended up moving to 73, then over 100. It's the same thing with oil. Is now the 100 is the big level to look at. And once we really get over that, we sustain over that, this thing's probably going to take off. But I would expect a lot of volatility until we do that.
Yeah, the headlines that we're getting intraday that we're getting right now, Jason, the headlines do not respect Fibonacci, right? The headlines are, and we're going to get 300 headlines a day, pretty much every day going forward for the next couple weeks here, whether it's related to the oil market specifically or military action. It's a constant barrage, and it's 24/7. The best thing you can do is probably just zoom out, right, and not freak out about any one intraday or intra-hour move or intra-minute move for that matter, right? What about the other aspects of this trade? This trade being the conflict in Iran trade, for lack of a better term for it, right? We know what oil is doing. We know what other commodities are doing. Are there other things going on that we should maybe know about? Other charts that are worth our attention?
Sam, this is a good question for Sam. I'm sure Sam has like 20.
Well, yeah, there's a lot on my mind, no doubt about it. Jason and I just, again, we had our Gold Rush Premium members call before we jumped on here, and we went over the COT data, which we cover every Friday in our Commodities Weekly column. In that COT data, we are seeing the commercial hedgers, they are carrying their largest net long position in years in natural gas futures. So in other words, speculators are betting heavily, more aggressively than they have in many years, against natural gas futures. And I don't think that is a smart move right now with this whole geopolitical situation going on. I think, I'm not an expert on natural gas fundamentals by any means, but, the positioning is certainly there for a big squeeze in that natural gas futures contract. And like we were just looking at with the natural gas stocks breaking out of that massive base there, I think that is a tremendous opportunity right now. And the marine shippers are also an amazing opportunity. Jason and I have been talking about the B-Wet ETF for a long time. Jason likes to make inappropriate jokes about that. But no, seriously, we were talking about this back at $20. Do we have the B-Wet chart, Spencer? I think it's in the deck.
We
if
do.
I'm not cool. Let's throw that up there. So yeah, we were talking about this.
The
right as it was
Breakwave
breaking out of the
Tanker
base.
Shipping ETF.
Yeah. So this tracks.
This is very popular,
Jason could tell
Spencer.
you more
Everybody
about
knows about it.
Yeah. Don't you trade like the actual shipping rates, Jason?
I do. So
Yeah.
very
That's
few
pretty
people
cool.
know about this one, but this is a shipping rates. Basically, it takes a lot of them, like basically all over the world. So you got global shipping rates, putting it into one place. So this gives you a really good feel for what's going on in the world and how shipping rates are going to affect your stocks, especially if you're in the shipping sector, oil stocks, and so on. So, looking at this one, it still looks really good. Once again, you're getting that pullback here. But if you look at this scenario and this situation, like shipping rates, I can't see them falling all the way down. I can't see shipping stocks falling all the way down anytime soon either. We need these things. It's going to still probably have a lot of hype behind it. It's just there's a very big situation here. So you're going to see a lot of volatility going forward. So just be ready for that volatility. Either have small positions or wait for your moment to really take the trade. And that's the way you're going to make the most money here.
Totally, yeah, and like a very similar trade. I mean, it's different, but an offshoot of the BWET, the shipper rates, is the just marine shippers in general. And structurally, these are some of the best charts in the entire market. I mean, I'm talking the entire market. These are some of the best charts out there. I mean, massive bearish to bullish reversal patterns. These are the structures that could lead to multi-year uptrends where the price goes, 5, 10x in many cases. And a lot of these stocks have already broken out. I think about 75 of the marine shippers, 75% of the marine shippers have broken out to new cycle highs. So I think it's go time for those pretty much across the board. And right now you're getting a bit of a pullback that I think is very, very viable. I love to buy weakness in the context of very strong primary uptrends. I think this is a gift.
I know I just said to zoom out and to not freak out over intraday moves, but really this is quite remarkable what is happening with crude oil right now. We are now down almost 5% on the day. We're down to $86. 86.
It's happening fast.
Ladies and gentlemen, we are in a fast market. The rest of today is going to be extremely interesting to see where the day actually closes. This candle on your daily charts, you'll see this candle for a long time. Jason, last slide here. I don't really know what to make of this because all these charts kind of look the same to me. They're all going up and to the right. So that's my conclusion. Is that right?
That's a good conclusion, Spencer.
Okay.
They are going up and to the right. So we're looking at a bunch of the different sectors inside the energy sector. Basically, what this is telling me is that this move is more sustainable than we think. A lot of people have been talking about the energy stocks and how terrible they've been doing and compared to oil. And of course they are. Energy held up really well while oil was in a big downtrend. And then energy broke out first. If you look at XLE, any of these energy stocks, ExxonMobil and so on, we've been highlighting those. You've seen those break out pretty well. But the sectors underneath it have been holding up really well as well. So if we look at this, you're seeing the groups part of this at the bottom where it's groups over the 200-day. That's 9 of them. That's everyone. Same thing with the 50-day. Everybody's above the 50-day moving average. Only one ETF currently is under the 20-day moving average. So that's telling you across the board we're seeing strength here and probably going to see continued strength in this sector. I wouldn't be too panicked about short-term noise and moves back and forth, especially if you're in the stocks. If you're trading crude oil, obviously that's a different thing. But if you're trading the intraday moves inside of the stocks, like you're not really doing that for the most part. If you're a long-term trader, you're really hanging on to stuff, you're running a trend model like me, or you're looking for targets, whatever it is, this looks very sustainable here, and this probably has some more upside.
Brian Harris asked if we're learning a lot today. I would say we're learning a lot. I mean, we learn a lot every day, but we're learning a lot today.
It's always a learning situation when you are in the market and there's big moves. It's kind of like, the best learning I've ever had in my career was, starting around the great financial crisis. Learning like, you want to short everything and then basically the market's ripping in your face and you have to change your mind very quickly. Then we're coming off a bottom and there was nothing to short for a very long time. And then it was technology was leading, which was the opposite of what was leading in the cycle before that. So you learn all of these things very quickly. So then today, if you look at this and you go, well, crude oil makes some big moves. One, you're learning how to trade commodities because commodities across the board always move like this. And they were always a big pain in the ass, which is part of the reason why you want to trade them a certain way and pay attention to people who know those markets very well. Sam and I highlight these trades a lot. We show you where to get in, where to get out, targets, trend models, whatever you guys need to basically trade the commodities markets well and make money for yourself. And we've had, I see people talking about buying houses off of Gold Rush. And I think somebody in the chat just was talking about buying a new car. Yeah, we got an email about somebody buying a house. And then we got somebody in the chat, I think earlier, said something about buying a car. So, I mean, this happens a lot here. So, we put these trades together well in a way that can help you guys make money. And also, we're trading them ourselves. So we want to make money selfishly. So we're helping you. We're helping ourselves. And it's a win-win situation.
I mean, I was telling Sam right before we went live. I mean, what a time. If you actually care about commodities, what a time to be alive right now, because it was pretty tough for what, like 15 years there?
Totally. That's the thing about commodities is
Yep.
their boom times are incredible. Fortunes
Yeah.
are made, like Jason was just talking about, but they can be very, very boring for a long time.
They're boring until
And
they're
we're
not.
in the boom time right now. So let's take advantage of it. Let's make hay while the sun is shining.
Yes.
All right. Listen, if you want expert advice, right, and to actually hear trades and get trades from people who know what the hell they're doing and are making money off this, go to the Gold Rush. The link is on the screen. It's allstarcharts.com/gold-rush. Jason and Sam are putting out new trade ideas, research, charts, scans, new videos every day of the week. Something's going out to the members. Get in there, get the trade ideas with the upside targets, with the downside targets, and you too can participate in what appears to be a commodity super cycle. I gotta say it. You gotta say that's what it is. And we don't know how long this chaos is going to go on in the Middle East, but we can assume that however long it lasts, that's how long volatility will persist in global energy markets, and that is good for traders. So, on that note, we'll get out of here. It is 3:38 on Monday, and during the course of this live stream, crude oil went from green to red. We are now down 8% on the day. What is the low? We're actually off the low. We're at 83 at the moment. The low there was, I can't see it. I'm not going to pull up a 1 minute chart, but down 8% is just remarkable stuff. I expect to see this candle on your daily, weekly, and monthly charts forever.
Yeah, it's gonna be stuck there. It's gonna be like April 2020.
It's gonna ruin the data. And then the worst of it is we're gonna look back and say, hey, what happened on that day? And the answer is gonna be, well, nothing really happened, right? It was just remember we invaded Iran, but nothing really happened that day. It was just things went kind of crazy. But anyway, all right, Jason, Sam, thank you for taking time. We will see you for your next video, which is going to be Thursday at 2:00 live right here, Stock Market TV, Gold Rush Live. We'll see you there. Everyone, thanks for watching. Let's get out of here. I'm sweating watching this market. I'm sweating. It's crazy.
See you guys later.
Later, guys.